Tesla is no longer just trying to win the EV market. Tesla is quietly positioning itself to become part of the physical and digital infrastructure of future cities. And most investors are still valuing the company as if it only sells cars. Hi, this is Ken. Today, I want to walk you through why Tesla's long-term value may have far less to do with vehicle deliveries and far more to do with how deeply Tesla becomes embedded inside urban transportation systems, not as a brand, not as a feature, but as infrastructure. By the end of this video, you'll understand why recent developments around private tunnels, autonomous driving data, and user experience point toward a much bigger strategic shift. Let's start with something that sounds simple on the surface. A private company is building an underground tunnel connecting an international airport directly to downtown. No taxpayer funding, no government capital investment, a 40-year operating license. That alone should make you pause, because traditionally, infrastructure like this is built by governments, public budgets, political approvals, long timelines, cost overruns. This project flips that entire model. A private company builds it, a private company operates it, and that same ecosystem supplies the vehicles running inside it. This is not about saving 12 minutes of travel time. This is about control of the transportation stack. When a company controls construction, operation, and vehicles, it stops being a supplier. It becomes a platform. Think about what that means economically. Instead of one-time vehicle margins, you now have long-term service revenue, recurring operational cash flow, high switching costs. This starts to look less like an automaker and more like a utility, but with software margins layered on top. That combination is extremely rare. Now let's connect this to Tesla. Tesla's vehicles are increasingly designed not just to be owned, they are designed to be deployed inside fleets, inside managed corridors, inside controlled environments. When Tesla vehicles operate inside infrastructure built by adjacent companies in the same ecosystem, Tesla is no longer competing for attention. It becomes part of the environment, like Wi-Fi. You don't choose Wi-Fi every day. You expect it to exist. That expectation is the ultimate moat. This is where autonomy becomes critical. Tesla recently crossed 8 billion miles of supervised full self-driving usage. That number is so large it's almost meaningless at first glance. But what matters is not the headline. It's what those miles represent. Every mile produces training data. Every mile improves edge case handling. Every mile strengthens the neural network. Autonomy is not a single breakthrough moment. It is a compounding curve. And Tesla is far ahead on that curve. Some people dismiss supervised autonomy as irrelevant. That's a misunderstanding. Supervision does not eliminate learning. Supervision accelerates it. Each supervised mile still feeds the model. Each intervention teaches the system what not to do. From an AI perspective, this is incredibly valuable. The asset is not autonomy today. The asset is the improvement velocity. Who improves fastest? Tesla's scale advantage here is difficult to overstate. Now let's zoom out. We have physical infrastructure being built privately, vehicles designed for deployment, not just ownership, an AI system that improves continuously through real-world usage. These pieces are converging. One creates the space, one provides the intelligence, one delivers the user experience. Most companies only control one layer. Tesla is increasingly touching all three. That brings us to customer experience. Recent EV satisfaction rankings place Model 3 and Model Y at the top. This matters more than many investors realize. High satisfaction reduces churn. Low churn stabilizes the installed base. A stable installed base becomes leverage. It lowers marketing costs. It supports subscription models. It enables fleet deployment. it creates political goodwill. Experience is not branding. Experience is retention infrastructure. When you combine retention with autonomy and deployment, something interesting happens. Tesla stops looking like a car company. It starts looking like a mobility platform. Platforms are valued differently. Platforms are judged on network effects. Platforms are judged on ecosystem lock-in. Platforms are judged on long-term optionality. This is why traditional valuation models struggle with Tesla. They are using the wrong category. Ask yourself a different question, not how many cars will Tesla sell next quarter, but how essential could Tesla become to daily movement inside cities? That's a much more powerful question because cities do not change vendors easily. Once infrastructure is embedded, it stays for decades. A 40-year operating license tells you exactly how long this mindset is, longer than any product cycle, longer than any model refresh. This also reframes the entire EV versus hybrid debate. It starts to look irrelevant. Powertrain choices matter at the product level, but infrastructure positioning matters at the civilization level. Tesla appears to be aiming at the second, owning the rails, not just the trains, owning the roads, not just the cars, owning the intelligence layer that coordinates movement. That is a much bigger ambition. Now, let me be clear. This does not mean Tesla execution will be perfect. There will be delays, regulatory friction, technical setbacks, volatility, but direction matters more than perfection, and the direction is increasingly consistent. Tesla is moving toward becoming a core component of how modern cities function, not a brand inside cities, but part of the operating system of cities. For long-term investors, this suggests a different mental model. Tesla is not just a growth stock. It is not just a cyclical manufacturer. It is not just an AI story. It is an infrastructure-aligned platform with AI acceleration. That combination is rare, and historically, assets in that category tend to compound value for very long periods of time. So, when you see headlines about daily price moves or quarterly delivery fluctuations, zoom out. Ask the bigger question: is Tesla becoming more embedded in how humans move? If the answer continues to be yes, the long-term thesis remains intact, even if the short-term path is noisy. That's my perspective. I'd love to hear yours. How deeply do you think Tesla can integrate into future cities? Let me know in the comments. As always, if you found this analysis useful, please hit the like button. It helps more than you might think. And if you want daily grounded analysis on Tesla's long-term strategy, consider subscribing. Thanks for watching, and I'll see you in the next one. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.